Hello everybody and welcome. Welcome to the T3 Live 30-day online home study course. We're very, very proud to bring this to you, and the reason for it being 30 days as opposed to just one day where we hit you with all the material, the entire class is experiential, where it builds and builds and builds and actually has a foundation. So as you can see in the title, the pieces as we put them together, very, very important to understand that everything builds from the beginning. But you want to have a solid foundation from the start. You don't want to just jump right to how do I get involved in the market. What we're going to really concentrate on in the beginning is where you're starting from, what you're bringing from a resource perspective, which is what we're going to talk about today in Section 1, Part 1, and ultimately where you want to go, the pieces that you need to get in between from where you're starting to where you want to be, and a solid recognition of what you already have, what you're good at, what you need to work on, and then creating a step-by-step plan how to get there. So over the 30 days, there's going to be some worksheets, there's going to be some PowerPoint, there's going to be some audio, and there's going to be some video. We purposely broke it up into a multimedia presentation because everybody doesn't learn the same way. So what I'd like you to do is to make sure that after this first video is done, if you haven't done so already, as we explained in a couple of the emails, have a pen, a pad, and some place to write all of your notes. But most importantly, it's very important that we have communication back and forth between each other. I'm going to make a very big point throughout this presentation. I won't be the only person teaching during the presentation, but I want to be the person that instructs you right from the beginning and offers some very solid advice. You will get the most out of the 30 days by participating more. Okay, so we're going to go through the building blocks, we're going to go through the step-by-step process, and most importantly, I'm going to walk you through a lot of the mistakes that I personally made where I wish that I had a 30-day online home study course before I started to commit money to the market in a bigger, more aggressive way. And I'm going to walk through some of the things that I did right, a lot of the things that I did wrong, and hopefully you could learn how to build this big list of things of what not to do, have a solid list and a strategy and tactics and a concept of what you would like to do, and ultimately learn to stay away from the big list, minimize mistakes, and then get to the point where you're doing nothing but flawlessly executing your strategy. Now, something that I want to point out from the beginning that's very, very important, and this is not something that I understood when I first started, okay? A trading strategy, a trading system, a trading methodology ultimately has to be something that you firmly believe in. If you blindly go off of what somebody else does for a living, you don't understand the spirit behind the points that they're trying to make, the subtle nuances. So what we're going to do is we're going to walk you through a solid foundation of how to look at the market, how to look at your resources, how to look at individual stocks, individual sectors, and then ultimately help you come up with a plan that matches your personality and matches your resources. One of the things you're going to see in the slides coming up is that you must match your resources to your strategies. You can't trade above the level that you're currently at. And the resources are not only how much money you bring to the table. There's a couple of other ones that we're going to discuss here today. So what we're going to do is we're going to get started. These are very, very cleanly worded. Proven, which means over time. Okay, now proven means it's a system, a strategy, and a way of attacking the market that has worked for a long, long time. And it has to do with respecting risk, which volatility you can handle, all things along those lines that we're going to present throughout the 30 days. Next, building blocks. There are certain pieces of your trading plan, your game plan, your philosophy, the strategy you attack to the market that all have to work together. If you're only going to the spot where, let me find out how to get into trades, I'm really excited about the entry part, you're missing the rest of the pieces of the building blocks. You need all of them to have a solid strategy. And last but not least, you're going to hear me constantly use the word consistency. You're not going to hear me use the word how much money you could make, all the profits you could make. The number one goal for all new traders should be to strive to have consistency. Money flows from consistency, and to back it up an even further step, consistency comes from flawlessly executing your plan, knowing what you're going to do next, not knowing what's going to happen next. There's a very big difference that most people don't understand from the beginning. I want you to write that down. Right from the beginning, the first part of what I want you to remember from the beginning, consistency comes from knowing what you're going to do next. That's where the market secret is. Now, the reason, we all know the statistics, The reason most people fit into that category of having a tough time in the market is because they can't have consistency because they've never committed to paper how they plan on being consistent. So think about that. If I'm telling you consistency comes from doing the same thing consistently or flawlessly, but you don't write it down, a lot of what you're going to be doing is emotional, spur-of-the-moment reaction type of stuff, and that's not how to build consistency. My background, my personal background, is I've been an entrepreneur for 25 years, and a lot of what I bring to the trading business is from the business world, seeing trading as a business. So I'm going to walk you through what revenue means in business as far as a trading business, what your expenses are, when you should increase your expenses, which basically from the trading perspective means when you should increase your risk or how much money you spend because you have the revenue to justify it. Unfortunately, too many people take it the opposite side where they want to risk more because they want to make more, but they don't have the revenues to justify the risk. It's like having an office where you have a nice, reasonable sized office and you have enough revenues to cover that based on the capital and the skills you put into your business. And then all of a sudden you want to jump to an office that has 3 times the space you have now, but you don't have the revenues. That's the same thing that you do, what most traders do when they start to take much bigger risk per trade. They don't have the revenue to pay for that. So I'm going to walk you through it. Think about that. You have to have the revenue before you can take a little more risk, which is one of your business expenses. So you want to make sure that your revenues can cover your expenses and then ultimately be bigger so you have a net profit. So again, the building blocks to get to consistency. That's where we're going to go today. Welcome, and let's start the 30 days. All right, first and foremost, the most important things to us, me and you, one-on-one, we're talking right now. What are you going to get out of this? I'm not going to get out of this anything more than being somebody who's having the fortunate opportunity to impart all of the mistakes that I've made, what I finally learned, what I got over the top, what I was frustrated about. But this is about you ultimately turning the corner and being consistent, okay? First and foremost, as I've already made the point, consistency comes from having a plan. Throughout this 30 days, there's 2 very significant plans that we're going to help you develop. Number 1 is your trading plan, and number 2 is your game plan. And I'm going to talk a little bit, probably about 10 or 15 minutes from now, about what the differences were in my personal trading when I started to really go in depth in my trading plan and my game plan, and we'll get into that. So the first one is you developing a trading plan, as I said before, that matches your personality. It's when you understand and when you believe it. Now, when I say understand and believe it, that means you will follow it to the letter. So you have to understand it. Like I said before, you buy somebody else's plan, tough to follow it all the time because you don't understand where it came from. And then ultimately, when you understand it, you believe in it, and you follow it flawlessly. That's the second thing I'd like you to put down on your sheet right now. Wherever you're jotting all this stuff down, write it down. Following your plan flawlessly because you believe in it. Very, very important. The second point of the course objectives is very, very important, is for you to develop the mindset to follow your plan with confidence and conviction. Now let's think about those 2 things for a second. I haven't talked anything about how much money we can make, what kind of returns we're going to get. This is all about setting out to figure out where you want to go and then have the confidence to say, I'm definitely going in that direction. It's the right direction. Ultimately, we're going to discuss some of what I've gone through and what basically makes the difference between taking every trade versus seeing a perfect signal and not taking the execution on that entry. And then more often than not, that one trade that you don't take ultimately becomes the one that you should have taken. So we're going to get to the point where you have the mindset, the thought process, and I'm going to hit you with this just a little bit now before we get a little more in depth in a different lesson in the next 30 days. Mindset. Just think about going to work in the morning. Whether you're commuting, it takes you an hour to get to your office to start trading, or whether you go from your bedroom to your kitchen to the 7-Eleven, back to your office in the same house, that commute, that pre-market ritual that you have, absolutely must start with visualizing what you're going to do and what you expect to happen today. If you open your trading software and you say, I'm going to wait to see what the market unfolds in the first 15 or 20 minutes and then I'm going to start to take my action, you're not ready. I'm telling you flat out, you're not ready. You need to start visualizing how you're going to react during certain situations, whether the market goes higher, lower, does nothing. All 3 of those things. And believe it or not, Disciplining yourself to do nothing when the market's doing nothing is probably one of the most difficult things to do because you always feel like you have to be involved. Now, I'm going to throw something else out there that I would really like for you to be the third thing that you write down. Do you want a job, or do you want to be paid for your skills? Trading is not an occupation where you must be involved all the time. Job, J-O-B, stands for just over broke. Do you want to be just over broke and get paid for your time? Or do you want to develop a skill where you get paid for how good you do? Okay? You want to develop the skill where you understand when there's something to do and when there's nothing to do, and ultimately have the right mindset because you visualized before the day unfolded or before the day even started. If these things happen, this is how I'm going to do it. And then you go into your strategies, your tactics, and get involved or not get involved based on the way it's happening. The way most people start in the business is they have entries that they want to see unfold because they can't wait to get started. So they'll put on a trade and they'll say, I want the market, go prove me right. Go unfold in the way that I hope. It works the other way around. You let the market unfold, and then if and when the market conditions unfold in your strategy, then you get involved. And that's a mindset. You need the conviction to understand, though, you're going to make money when you follow your plan, which is where the commitment, the confidence, all of that comes from. But none of this can happen until you're starting at the solid foundation of understanding where you are now, where you want to be, and how to fill that gap in between. Okay, we're going to discuss a lot of that over the next 30 days. All right, as we said, this course is all about you. We're going to discuss some of the results that you want. It's all about solving something for you right now. Number one, to either take your trading to a different level or to just get you to the point where you're not losing as much money so you're around long enough to get to the point where you can start to earn some money. Everybody comes to the business from a different perspective. Whether you're later in your business life working a full-time job and you're looking to secure your retirement, or you're 25 years old, maybe even younger, there's some people younger doing it, and you want a good monthly solid cash flow. This is a part of the objectives we're going to talk about in one of the later lessons, actually part 2 of the class, to understand what is the objective of your trading business. And when you write a business plan, I don't know how many of you might have written a business plan, it's your executive summary. What is the purpose of this business? Is it to get a nice steady 7 to 10% a year because you're getting a little bit older and towards your retirement? Or are you 25 years old, your risk tolerance is a lot bigger, you could take some bigger swings, bigger intraday swings, bigger day-to-day swings, and it's not so much the day-to-day, what I'm going to make now, it's I need to make my cash flow right now. Two very different, distinct objectives for your trading business. So we have to address that right from the beginning. You have to address that from the beginning. Am I doing this to learn to preserve my capital and just make a little bit, keep up with inflation? Or am I doing this to pay my bills? We're even going to take a little step further than that. A lot of traders get into the business saying, I have X amount of money allocated to become a professional trader, and I'm going to spend this many months because I can pay this many months out to my bills. I'm going to teach you the right thought process for doing that, but it's got to be a part of your business plan from the beginning. It's going to be the amount of money you have allocated to the business, the amount of money you have allocated for your personal responsibilities outside of the business, the amount of money it's going to cost you to run your business from internet connections, software, those kind of things, and ultimately how do those things match, and is there a realistic plan in place for your resources minus your expenses, minus the time you have to be around long enough. So everybody has different objectives. It's very important for you to set your objectives first before you start committing capital, because you can't develop a strategy until you know where you want to go. Number two, obviously, depending on what your objectives are, low-risk ideas with good profit potential is everything that you want to set up. Now, everybody knows the numbers, 3-to-1 risk-reward ratio, 2-to-1, whatever it happens to be. But I can tell you this, let's start this out from the beginning. You must set objectives for every single idea, every single trade scenario that you put together that at minimum is 2-to-1 or 3-to-1, preferably 3-to-1, risk versus reward. Now, you come back at me and you'd be like, oh my God, Peter, I don't understand. There's just not enough 3-to-1 reward trades. Well, what are you telling me? You're telling me you want to be involved versus you want to be running a professional trading business. If everybody who is Walk down the trader path before you tells you if you're taking one-to-one trades, you're going to be a break-even trader at best, and only wait for the ones where the risk justifies the reward that you're looking at. And that's how you get to the point where you start to earn money. And remember we said before about your business, your expenses, your revenue? Well, those small losses add up, and you need some trading revenue to pay up for those expenses. So minimum, low-risk ideas with good profit potential. So write that down. From the beginning, whatever trade you're getting in, not only being defined as the risk point or the risk dollar amount, which I'm going to talk about in a little bit, you must know the potential on the trade, have a justification to believe the potential could be reached, which is another big thing. We're going to discuss that in a later lesson, midway through the course, which I call trade expectation. Just basically putting it together before we get into more detail. It's building an argument for the validity of the reward potential. And putting that in English, it basically means, do I really believe it can get up to where I need it to go to me make a profit? And learning how to discern all of the different factors that are in the market to increase or decrease the probability for follow-through will determine low-risk ideas. That's easy to define. There's the spot on the chart I'm getting out if it gets there. But then building an argument for a justification of, okay, it's at 20. I need for it to get to 23 for it to be 3-to-1. What do I see in the market, the sector, the volume, the world, all of those things to tell me I think there's a really good chance that it's going to reach my profit potential? So low risk, good reward potential. Next, solid understanding of how to manage money / risk as a business. Now, I just started out before. Everything I'm going to be walking you through personally all comes from my experience as a professional entrepreneur. I've been an entrepreneur for over 25 years right now. It's all about revenues and expenses. Take it a step further, and we're going to relate business world to trading world. When you're in the business world, you need to understand what your unique selling position is or how you plan to market your business against all of your competition to generate consistent revenue. Now put that in the trading perspective. When you enter the world of trading, you need to know what your edge is. You need to know what position in the market you're going to take to develop a strategy to exploit that edge, in your opinion. Now again, the edge is increasing the probability of something happening to ultimately learn how to compensate for the expenses to run your business. And we're going to get a lot into the expenses and winning and losing trades and that kind of thing. We have a whole section on peak performance, all right? So solid understanding on how to manage money. Managing your money will be the #1 skill that you should develop out of everything. And I'm also going to talk about how to learn. That's actually something that we're going to discuss here today. Something I wish I knew when I was in school. I got through school pretty easy, high 80s, low 90s, without really studying that much. When I was in school, I always thought if I opened a book on something and didn't understand it right away, I wasn't going to get it. Well, I'm going to tell you now, if you've never been taught it before, I wish I knew this back then. When you're introduced to something new, which managing money for yourself, quite frankly, for most of us, is something new. We're taught how to work hard. We're taught how to get overtime. You know, my dad worked for Con Ed for 42 years. As much overtime as you can get. But then what happens with that money after the fact? You want to learn to manage your own money as if it's a side business that you have. And I have a whole slide that we're going to talk about here tonight about the different options of who could be managing your money. And you're at the bottom of the list for most of the time. And we're going to talk about the people that are above you on the list and why you want to be on the top of the list. So managing your own money, managing risk for a living. Let's write that down. When you're managing money, you're managing risk and probabilities. Period. Never see it any other way. When you're managing money, you're managing risk against probabilities. The higher the probability, as I said before, your business can probably have a little bit more risk because the expectation for profit is a little bit higher. And a lot of what we're going to talk about during the course is understanding when a trade might have an increased or decreased probability. It's that simple. And I'm going to give you a really quick example. And nobody likes to use gambling when you talk about comparisons between the two businesses, but I'm going to give you one that really is not a specific example, but one that everybody can understand that I want you to take with you. let's say you're playing poker and you have 3 aces in your hand. Everybody can agree, not that many people at the table, 3 aces is a good hand. Should you or shouldn't you put a little bit more money in? Absolutely should, right? Push some more chips in, not all of them because you don't have 4 aces, but you put a decent amount more in than you might have on a normal basis. Is there a guarantee you're going to win on that hand? You did everything you were supposed to do. Is there a guarantee that nobody around the table is going to come back with a better hand? Of course not. Now, I'm going to translate that over. What are you thinking about after you get out of that position? You're going to be thinking about one thing. I had 3 aces. It stinks I didn't win, but I did the right thing. That's what you want to think when you're trading. After you get out of every single trade, you should be saying to yourself, would I take that trade again? Not did I make the money on the trade. Of course you want to make money on every trade. Of course you'd like to make money on most of your trades. But that's not the right thought process. The results will be your goals. But your thought should be more, am I doing what I'm supposed to do as often as possible? Now, we're all human, unless somebody's running one of those systems, like CEO of T3 does. Sean does it very successfully. As an individual trader at your own screen, your number one question every single time you get out of a trade, would I take that trade again? I cannot emphasize enough how important that is. Write it in blue ink, highlight it, circle it. Would I take that trade again? I'm going to take it even further. You're in a trade and you're not sure about it. Here's the next question. If I didn't have the trade, would I want it now? If I didn't have the trade, would I want it now? 2 very, very important performance, mindset, skills, tips, techniques, whatever you want to call them, for you to use tomorrow to talk to yourself while you're in the trade. That's assuming you don't have a coach, assuming you don't have a mentor, and we're going to get into those in a little bit. Okay? Last but not least, the opportunity to ask those who are further down the trader path for advice. Now, throughout the 30 days, I'm going to be discussing the trader path quite a bit. Now, there's a very big distinction between traders who teach trading for a living but don't trade full-time versus those who are trading, actively involved in the markets with consistency, and you can ask for advice. You want to be involved in the second group. Now, some of the top traders also have the biggest egos. There's some of the people that are, I wouldn't say they're unapproachable, but they don't understand what you don't understand if you're not getting it at the level that they are. But I will tell you this, no matter where somebody is on the trader path, and I'm actually going to list the trader path on one of the slides coming up, but there's beginner and you walk your way down. I'm going to tell you flat out, each of the instructors and lessons you're going to receive during the next 30 days are from actual traders who are in the market now trading, which you can see on the T3 Live virtual trading floor, who have been where you are right now. Maybe just a little bit further down the path that you could ask, how do I get down to where you are? And if you're with somebody who wants to give back, if you're with somebody who gets it, with somebody who understands or have the opportunity to understand where you are and the point that it takes to get to where they are, then you're around the right group. And that's what it means to be at T3 Live right now. There's a lot of that goes on. There's coaching, there's mentoring, there's mastermind groups, and this free 30-day course. This is all about helping you get to the point where you're curious about how to get better. That's what it's all about. It's not about us force-feeding stuff for you and telling you everything we do is perfect. It's about us helping you come up with the right questions to ask, how do I get to where I want to be? And I'll tell you flat out, without getting all psychological and all of that kind of stuff, it is extremely difficult to answer a question when it's raised from the same level. Okay? You can't answer a question when you're asking somebody who doesn't have the answer. It's kind of like having a tape recorder that only has Italian in there and you want it to teach you how to speak a different language than Italian. You want to be able to ask questions to somebody who understands and has a different answer than one that you can't answer yourself. You are who you associate with. There's not even a question about that. So the results, consistent monthly cash flow, low risk, good profit potential, solid understanding of managing risk. Remember what I said there. Risk versus reward and trade expectation. You're managing risk versus probabilities. Get that in your head now clearly. Trading's about risk versus probabilities. Too many traders in the beginning go like, it was wrong. It wasn't wrong. It was, did you follow your plan, assuming you had a good plan? And last but not least, the opportunity to ask those who are further down the path for advice. Okay? All right, next. We very clearly talked about where you want to go. Now let's discuss some of the things that I've experienced, some of the other T3 traders have experienced, some of the T3 members, maybe even yourself, have experienced. It's very, very important to understand that it's great. Everybody sets the New Year's resolution. They set, it's January 2nd, all the games are over, and now for the next 60 days, I'm going to do this. And you see just this clear, unobstructed path towards, there it is. I lost 20 pounds. I ate nothing but grilled chicken for a month and had salads and did everything I was supposed to. Nothing's getting in my way. We all know that doesn't happen. So what do you do about it? Address some of the potential obstacles between where you are, your resources, and where you want to be. And I'm going to basically give you a heads up on some of the ones that I've been through and some of the other guys. Now, to me personally, this is the first one and the big one. The single biggest obstacle will be your ego getting in the way of where you want to be. In other words, the desire to be further along than your resources. I'm going to discuss your resources in a couple of seconds. You must identify clearly, and I can't emphasize this enough, be honest with yourself where you're starting so that you can go from here to here to here and make slow, good, progressive steps so your resources increase, your skills increase, your education, your knowledge. Remember I said that big list of what not to do, small list of your strategy? That takes a little bit of time, and that's one of the things with weekend seminars that don't work. If you just take a weekend seminar and there's no follow-up after the seminar, it's impossible to learn because you need different conditions, different market conditions in order to understand how to handle different market conditions. So if you have a good, solid foundation of where you're starting from and not have that desire to be somewhere else that is not realistic for you right now, like, for example, listening to Mark Sperling or Scott Redler or any of those, Evan, some of the bigger traders in the room, you have to ask yourself, are they trading right now from where I'm starting? That's got to be something important that you ask yourself. So the desire to start further than where you are is a really, really big obstacle. I'm going to help you work on that. All right, number two, time. Time is a resource. Time to learn. I just said about different market conditions. Time to give a system a try. Time to develop a plan. And time to game plan. So develop a trading plan and a game plan. We're going to get into a lot of details on the differences between the two. A lot of people confuse them. So time is a very big resource of yours. I'll give you a perfect example. I sent out an email today. We have a presentation going on this evening. It's a complimentary presentation. And I basically said, do you spend time or do you invest time? Most people spend time. Most people waste time. Time is a valuable resource to help you improve your skill. Okay, now whether you do it, I do all my game planning on the 7s. I either do it 7 o'clock at night so I know I'm uninterrupted for 90 minutes, or I do it 7 o'clock in the morning when I get to the office and I know I have a good hour, hour and a half to do it. Time is something you have absolute control over. Make sure you use that valuable resource wisely. And what we're going to walk you through, creating your plans, will help you actually allocate your time, first to understand where you are, then plan the time to gather some other resources that you might need, maybe continuing education, maybe some additional capital, maybe some time in the market to paper trade. I don't believe in paper trading. I can flat out tell you that. Your heart's not beating. You don't really have that same feeling. I'd rather see you trade 100 shares or one contract if it's a futures market, index futures, than to just say, I would have bought there, I would have bought there. You don't know how you're going to react. So we're going to get into that a little bit too. All right, another resource, risk capital. And I actually have two pieces here that are very, very interesting that can be a little, wow, really, when I talk to somebody who's a new trader. Capital and leverage, too little and too much. And I'm going to give you two examples of too little leverage and too much leverage. Okay, too little leverage, again, I'm going to go back to opening a business. Too little leverage means your business is underfunded and you're trying to attack a market. You're trying to open up a hamburger stand next to McDonald's. Okay? You're not funded enough for it. You're only opening it up. You took all the money out on your credit cards, and now you're opening your business. That's too little. That can be dangerous because you need to be able to withstand the expenses of marketing, hiring employees, inventory, all the same types of capital outlay that you're going to have to run a trading business, just a little different, obviously, in the categories. And then you have the other side of the equation, too much leverage. I'm going to give you a quick story of somebody who blew out of the business very quickly. Opened up an account, and I was coaching him. I wasn't mentoring him yet. We'll get into the difference between coaching and mentoring. The first day his account was live, we started talking back and forth, and he asked me very clearly, why can't I short 1,800 shares of the Qs? And I basically said what anybody in a responsible position would say, why would you want to short 1,800 shares of the Qs? You're just trading for the first time after we went through the coaching sessions. And he said, because that's what my buying power will allow me to do. That is absolutely the fastest track out of the business. So a resource of capital, too little and too much, you must understand how to use that resource. Again, you can go to any other business, carpentry, for example. You got the greatest skill saw in the world. My dad would make fun of me because I'm not the tool guy. I'm not Tim the tool guy. But you can have the most expensive circular saw, skill saw, whatever the heck it is. If you don't know how to use it, go down to something you understand how to use. And that gets back into the capital as well and picking the right fight. Pick the volatility in the market to match your resources of capital. An obstacle could be how you use your capital, not only whether you have too much or too little. And believe me, too much can be having a really sharp knife, not understanding how to use it. But using your capital as a resource and understanding how to use that resources in conjunction with your skill levels is what we're going to walk through over the next 30 days together. Next, obstacle as far as learning and getting along the trader path, okay? Education. I will flat out tell you 90% of the people who get into this business have accounts and a login, okay? No education, very little education, and here's the part that most people flat out blow. Continuing education. Now, I'm doing this a long time. From an entrepreneurial perspective to being a trader and running an entrepreneurial venture as a trader, okay? To say that you don't need continuing education as a trader is one of the most foolish things you could ever do. Because I'm going to tell you right now, would you like a doctor to work on you who hasn't looked at a medical book in 5 years? A lawyer who could care less about anything that's up to date with new laws? An accountant who doesn't read any of the updated tax laws? It's foolish. Again, we're going to list the people who are managing your money right now or who you could possibly get advice from, and you're on the bottom of that list, okay? Continuing education, understanding how to get return on your money is the #1 investment you can make. Because let's face it, whether it's relationships, whether it's you're living on your own, whether it's goals and things you'd like to buy for yourself, they all revolve around money. And I'm not saying to be Gordon Gekko, greedy, that guy. You need a solid income to take care of some of the things that you have to have, and some of the things that you want. Continuing to learn how to get better. Not just going to the weekend seminar or buying the software and then this is going to be all the answers. It doesn't work that way. Plan. Plan to have the obstacle of not knowing enough. I'm telling you flat out, and if you disagree with that, I will have a heated discussion with you until we're both tired of talking to each other. Continuing education is a must. Now, take it a little step further, coaching and mentoring. I'm going to get into those in a little more detail in a later slide. Next obstacle we have, the wrong education. I actually saw a slide, wrong education, not relevant, or the wrong style for you personally. I actually saw a slide on the subway here in New York City. I want to say it was probably about a month ago. And it said, 2 mistakes you will literally pay for the rest of your life. And it was relating to education. Not getting any education and getting the wrong education. I can't emphasize enough. You don't know what you don't know right now, especially if you're somebody new trading for less than a year. You must be able to ask somebody who's further along or learn from somebody who's down the path by devouring books, seminars. If you look at the most successful people, there's the old joke that says you go into somebody's house and you can tell how learned that person is. The person who doesn't have any money has the biggest television, and the person that has the most money has the most books. Now, I'm going to talk a little bit about books and how you can get caught up into a cycle of booking yourself to death where you ultimately think the next book is going to have the answer. And we're going to work on helping that not be an obstacle for you too. Okay? Last but not least, a journal and your own experience. It must be, as I said before, I don't believe in paper trading to actually learn how to trade. I think paper trading is good to help you get concepts. Paper trading is good to help you get comfortable with the software. But ultimately, learning how to trade, the most valuable trade, actually, let's slow that down a second, and I want you to write this down. The most valuable trading book you will ever read is your own journal. It's 100% your own experiences of what's actually going on from when you commit capital, what you're thinking, what the results were, and what you plan on doing about it. You definitely want to get a foundation of training of classic technical analysis, tape reading, risk management, order execution, all of that kind of stuff. But your own personal journal, I used to call them key observations. What were the key observations that I came up with during the day that matter? And that's where those two lists come from. Remember the list I said, the big list of what not to do, and then the smaller list of that's your strategy. Now, it doesn't necessarily have to be a smaller list, but it's a list that's not big. Trust me, the list of what not to do is huge. But you take all of those things from your strategy, and then during the day, you actually start to catch yourself. Well, that's number 27. It says don't do that. And you start to slow yourself down or don't do it. All right, those are some of the obstacles. Next, unprofitable steps. It says success, but technically it's the unprofitable steps for lack of success. And I would venture to say these are proven as well. Okay? Number one, fund an account. I'm actually going to buzz through these and then we'll talk through them. Number two, expect to earn 20% a month. Well, if I put $5,000 into my account, I expect to make at least $1,000 or more a day, and I want to get 20% a month. That's 240% a year. That's realistic. Next, begin to trade, and I'm going to discuss in a second why fund an account and begin to trade are highlighted there in red. Next, we have go to school, buy a book, attend a seminar, and as I hopefully just made the point in the previous slide, end your education there. Obstacle, unprofitable. You get the picture here? Maximum leverage, just told you that story. And we're actually going to get into day 2 of the course actually is about risk. And we're going to talk about maximum leverage and how dangerous that can be. Next we have don't respect risk and especially per trade. I used a little bit of an example before about gambling, and I can tell you this. One thing that's a monster difference between gambling and trading, gambling, the hand is over. Unless the pit boss is granting you another spin without any cash, trading, that's not the case. Trading, you could sit in a bad position and blow your account out in one trade if you don't respect risk per trade. Very, very important to understand risk per trade. And as we, again, tomorrow we're going to discuss it in day 2. Risk per trade, per day, per month. All have to be planned how much you plan on allocating. It's, think about it, no different. I'm in a studio right now. There's rent on the studio, so you have to know what that expense is going to be. So a healthy respect for risk. Very important one here, don't understand how to capitalize on great opportunities. Now let me explain that to you. What if you were playing poker? Again, I'll go back to poker. And you don't understand what 3 aces means. And you just check or don't do anything. Let's take to the market now. I'm going to just go through two very quick examples. Your stock, what's going on in the stock you're watching right now that you game planned, obvious. Looks good, nice bull flag, moving average is doing what they're supposed to, volume's doing what it's supposed to. You place a trade. But all of a sudden, 2, 3, 4 days in a row, the stock, the sector, related stocks in that sector for that stock, and the market internals, and the volume are lining up. See how we talked before about building an argument for a trade? We're going to get into a little more detail, trade expectation. You start to build an argument for that trade. You must understand, if you want to take your trading to a different level, how to capitalize when everything is lining up. Push your risk because the reward potential is there. Do what you're supposed to do, and be okay with the result because you did what you were supposed to do. So again, I can't emphasize this enough. This is very, very important. You probably want to make this another thing you write down. Learning to understand how to capitalize when the probabilities are significantly higher. Monster part of learning how to trade. All those small losses have to be paid for. Next, reviewing results with someone earning less or nothing from trading. Think about this. Okay, if we could just take a couple of seconds and really dwell on what this is going on here. How many people have the opportunity to ask somebody who's trading on a professional or even consistent level? Now let's say Let's separate professional from somebody who's consistent. Both people are earning money. Professionals doing it for a living, they're full-time in front of their screen. Somebody else might be doing it consistently, but maybe they're a fundamental trader where they hold the trades for a week, a month, 2 months, 6 months, whatever it happens to be, and they're still at their full-time job. Are you only asking people, again, I'll go to the trader path, who are further down the road from you, who are succeeding at a higher level than you for advice, or are you asking your friends at the barbecue who are broke? Really weigh it. Which is the profitable step to success? That's clearly an unprofitable one. You can't ask somebody who's not earning money as a trader, how do I earn money as a trader, or am I doing the right thing? Is this strategy good? If they're not doing it or haven't done it what you're trying to accomplish, that's not the person you should be asking. So make sure you have the right steps to profitability. Last but not least, I can't emphasize, this one's a little bit more geared towards full-time active traders, or somebody who's trying to become a full-time active trader, or even take it a step further, somebody who has allocated the time and the money to be a full-time active trader. Okay? Here's the scenario that I see unfold, and I'm going to help you right now not fall into this unsuccessful trap. You have a certain amount of money allocated, a certain amount of money, time in your head that says, well, if I put X amount of money in my trading account and I leave this amount of money in my savings account, so there's trading account, savings account, and my expenses. Well, savings account, my expenses, that gives me 8 months to try it. I should be fine. I'll be learning the business in 8 months. That can be done, provided you have the right resources, the right help, the right education process. So you got 8 months in your head. I'm telling you for a fact, my background, I have personally been managing, as well as my own trading, but I've been managing day trading offices for 10 years now, going on almost 11 years. I could say this with the utmost experience in this. When somebody has that 8-month, in this example, time frame in their head, I'm going to tell you flat out, they don't start to learn with a sense of urgency until the 7th month is over, or when there's maybe 6 weeks left. Don't do that. Don't make that mistake. Learn from the first day. Start making those key observations. What am I doing right? What do I need to work on? Where can I get help to work on that? I'm telling you, don't make the mistake of finally developing a sense of urgency when it's too late. Have the urgency to learn now and every day. Actually, write that down. I'm going to keep saying that throughout the program. Write that down. Have the urgency to learn from the beginning. And to take one step back from where we just were, previous bullet point, make sure you're learning from and with somebody who's further down the line. Have the urgency to learn from the beginning. I will tell you flat out, too many people have the urgency at the end. Okay, next. Well, we talked about the unprofitable steps for success. Let's get into now the time-tested steps that actually work. Number one, get relevant training and education. I'm going to give you a perfect example of this, if I could just take a second here to get a little bit off tangent. 2007, the floor of the New York Stock Exchange, just prior to 2007, was filled with 5,000 specialists and clerks and brokers and whatnot, and it was a madhouse. It was the bastion of everything that was going on with Wall Street. Okay? The direct plus execution for where a self-directed trader can shoot an order to a specialist on the floor of the exchange electronically had this parameters, for lack of a better way of putting it. If I wanted to trade General Electric or General Motors, either one of them, and I wanted to do it quickly, now I'll just give you a really quick point here. There were two ways to send an order to the specialist. There was the Direct Plus or Super Dot. Super Dot was direct order turnaround, so I would send the order to the specialist. He'd walk around, look at his post, and and fill it whenever he got to it. The catch was I could do that with as much shares as I wanted to. So there was a time versus, okay, in exchange for the time of him getting to my order versus I could do with as many shares as I want. But there was an electronic execution that eventually came into play called Direct Plus. Now that Direct Plus, I could send it to that specialist quote and immediately get a fill because it's an electronic order. But there was a catch. It was 1,099 shares on one side of the market every 30 seconds. So what that meant was I couldn't blast him for as many shares electronically. He'd only have to post a certain amount of shares because basically the exchange had his back. So here's what happened. I couldn't buy and then buy another 1,099 shares or up to 1,099 shares right away electronically. I had to wait 30 seconds. I could buy and sell electronic because it was different sides. So there was SuperDot, but then there was the electronic one. And this is getting to the point of relevant education. If you're learning from somebody who doesn't understand what I'm about to explain to you, how it happened and how it affected trading, you're not getting the full picture and you're not putting yourself in a position to win. So what ultimately happened, everybody and their grandmothers, electronic executions are the way we have to go. January 2007 comes in, they come up with another order. Okay, this order was called hybrid. Hybrid essentially allowed everybody at home, and anywhere else for that matter, to electronically hit the specialist for unlimited shares electronically. So he went from 1,099 shares allowed to hit his quote every 30 seconds, only on one side of the market to unlimited, everybody could blast him right now. Completely emptied the floor of the New York Stock Exchange. Everybody watches CNBC now, nobody's in the background. Everything's an algorithm now. Hardly any specialist down there. Completely changed how you trade New York Stock Exchange stocks. I had personally a friend in Florida who's a very, very good trader. Prior to this execution change, now think about this. This has nothing to do with balance sheets or anything. This is an execution change to how we placed our orders to the floor of the exchange. This guy made consistent money year after year after year. Starting in January 2007, because he traded mostly New York Stock Exchange stocks, his shares went from 1 million a day within a couple of months to 500,000, to within 6 to 8 months he was out of the business because of the execution. Refused to learn what worked now. So one of the profitable success steps is getting relevant education to today's market. To today's market. That's what's important. Number 2, planning. Planning, 2 different types of plans. Well, we have the objectives in the beginning. You create a trading plan to meet your objectives, and then ultimately a game plan to attack the market using your strategy from your trading plan. Planning is very, very important. In a couple of slides from now, I'm actually going to talk about the depth of that. Next, place live trades with predefined risk, and you accept the risk fully. Now, I want to talk about something here very, very quickly. If I could just get one point across to you right now, and this is something I'm actually going to ask you to write down again, okay, or in addition to the other stuff. Is putting on a trade accepting risk? Most people will say, yeah, there's risk on the trade, I accepted it, so I put the trade on. No. Accepting risk on a trade means you go into the trade saying, I'm risking $200 for this idea, and I am fully okay with if the idea does not pan out and I have to pay that expense of $200. Why is that distinction so important? Because I'm going to give you an example. You're at your screen, you're trading, you're really focused, you got the trade on, you got, let's say, 500 shares, you're risking 40 cents. Stock goes down and it gets down to 39 cents, 40 cents against you. There's the $200 that you chose to risk. Unfortunately, we've all gone through it. I'll tell you flat out, I've done it. Get to that spot where you're like, give it a little bit more time. What happens? 40 cents becomes 50, 50 cents, and all of a sudden what was an expected and should have been accepted $200 loss becomes a much bigger expense than your business can handle or that you plan to take. Okay? I can't emphasize this enough. Accepting the risk means acknowledging you might lose the money and being okay with it. Write that down. Accepting risk means you have a dollar amount and you're okay with putting that risk in relation to the potential reward. Putting on a trade is not accepting risk. Can't emphasize that enough. We'll get into that in more detail. All right, next. Reviewing your plan and your results with a successful coach or mentor. I put in here, think intern or doctors, intern/doctors. Think about where you are in the trading spectrum and think about wanting to become a doctor. Okay, if you start out, you go to school, you go to college, then you go to medical school, then hopefully you move on, you become an intern. After you become an intern, then you become a doctor. What's going on between the doctor and the intern? And well, actually, let's even take a step back. How much learning went on before you even became an intern? You're starting to get the picture of what it takes to be a professional? Not insurmountable, because the beauty of opening a trading business is you could start a smaller business if your resources are a little bit less. But think about it. 8 years probably of school, minimum 6 before you even become an intern. Then you go to a doctor in real live conditions, for lack of a better way of putting it, and you ask questions while it's unfolding. That's a part of the profitable, safe, if you're going to go to the right hospital, safe way to learn how to become successful. So you need, I'll keep going back to that, you need somebody who's a little further down the line, and obviously intern doctor and all that learning beforehand. Think about how much learning you've done prior to now when you decided to open up that business. Okay? Next step is having plans, revising those plans, and then trading again. I will tell you flat out, most people get to the point where they have a plan, if they do, which, by the way, most of the open house presentations that I do, seminars and whatnot, people always come into the back of the room and say, well, let me talk to you about this, let me talk to you about that, and be like, that's great, I'll be more than happy to spend time with you. Email me your trading plan. Let me look at it for a couple of days. This way we can have a great conversation that's relevant to you instead of me spitting out to you, trend is your friend. Doesn't do you anything. Most people don't have a trading plan. Why? Why don't most people have a trading plan? Because it's work. They want the easy way out. They want the system that just spits it out and says, let me do it. All right? You're not going to learn how to do it that way. All right? So trade, write down observations. After you have your plan, go back to the market with revised plans, trade again, and keep doing it until you ultimately come to a plan that you have conviction in, identifies a little niche that you like to exploit in the market, and then trade the heck out of it. Next, and if not last, if consistent, learn how to trade bigger. We're going to discuss the trader path and where it's going to go. Very, very important. You don't want to start to size up until you have consistency. Now, again, I'm going to ask you, what did I say in the very beginning of the presentation about where consistency comes from? Consistency comes from having a plan with an edge, and you follow that plan to the letter. So when you learn to be consistent, then you learn multiple positions, then you learn bigger share size, and then you learn how to hedge. And then ultimately you learn to trade some different types of securities if you want. There's Forex, there's index futures, there's stocks, there's options, there's a lot. But I will tell you this. I'll go right back to the store again, okay? Let's say I have a deli, and I'm very good at this. This is what I do. And all of a sudden, a whole bunch of different things end up popping on my shelf. Now, I have inventory all over the place, but I'm not good at any of those other things, but I got shelf space for them. Think about this when you decide to open up a small stock trading account, a small Forex account, a small options account, a small index futures account, small commodities account. Now you're all over the place. Who makes more money, a specialist or a general practitioner? Think about that when you're running your business or when you decide to start planning and running your business. All right, next. I want to talk a little bit about why what we're going to experience over the next 30 days is different. Why is this path that T3 is going to walk you through is different? Now, I had this first one in there. I couldn't quite figure out how I wanted to word it. And if I could just take a second to really implore you to really think about what I'm going to tell you right now. Picture you're working in your pizzeria, okay? You're behind the counter, you got all the flour, you got the salt, the sugar, the mozzarella, you got everything, calzones everywhere, and that's how you run your business. That's how you went to the bank, raised money, wrote a business plan, said, I'm opening a pizzeria because this is where I can exploit my new store, Mr. Mozzarella's. I know exactly what I'm doing here. You're open a month. 2 o'clock in the afternoon, somebody walks in the store and say, you know what, I'd really like a taco. And you look at them and you're like, but we're a pizzeria. This is how, I wrote the plan, how I'm going to make money. The guy's like, but I really would like a taco. Can you do me a favor and use some of your resources to bring me a taco? So you go in the back, you run out the back door, you go and pick up all the ingredients, you grill up the chopped meat, put everything in there, you bring it out front, and you make the guy a taco. I want to relate this to trading. You spend all of this time with us learning how to identify how to exploit a niche in the market, one that matches your personality. The market opens, it's unfolding, all of these things are going on, And then all of a sudden, something's calling you from over here that has nothing to do with your trading plan, nothing to do with how you decided to open your business. And you start to look, and it's still calling you. And you start to look, but that's what you do good, but something over here is calling you. Somebody sitting next to you called out a trade. Somebody in the virtual trading floor called out something that you have no idea what they're looking at, but it just exploded. Something you don't even know why. Somebody just walked into your trading floor and called out a taco. I'm telling you flat out, this path that we're going to walk you through, this learning session for the next 30 days is going to help you come up with your niche, your pizzeria, so that when somebody comes in and wants something that's not on your shelf, you're going to be fine with just letting it go and looking that guy in the face and say, I'm sorry, that's not what we do here. This is how I make money, and this is how all of my resources are going to be allocated. Next. Planning versus reacting. We don't have to get into a long story here. This is basically the same thing. You planned all of these resources and allocated them to becoming a pizzeria. What happens? Somebody pops in your store. You react to a taco. Forevermore. Somebody calls out something you're not ready for. Say, get the taco out of here. I don't want it. Not what I do. Sorry, bub. The taco place is down the block. You want to have all of your ideas. Every time you allocate capital to the market, you want it to be done purposefully. In other words, you want to exploit your edge. If somebody calls out something that you don't normally do or that's not written down in your plan, let it go. Only take planned trades. And I'll give you a really good metaphor to think of. You went to your neighbor's house, you had a barbecue, brought this plan to your neighbor's house and said, this is how I'm going to trade money and I need to raise $250,000. Looks it over. Good, good, good. Makes a lot of sense. I'm going to come over once a week, not every day, won't hound you. I'm going to come over, we'll have coffee on Saturday mornings, we'll run through the trades you made to make sure you're following the plan. Saturday morning comes and he's like, what the hell is this? You ran out the back door for a taco. That's reacting. You're reacting to what's going on instead of knowing what you're doing. Knowing what you're doing comes in the plan. Hard work, but we're going to work on that together. Next is the psychological part of what makes this path different. Performance versus results. And this is really more of a... it's kind of a thought process, not one of those X's and O's type of thing, but very, very important part of the trading process where almost all new traders get into the business focusing on results. Again, I'm talking about what's different. What's the difference between somebody who is on the wrong path versus somebody who's got a really solid chance to learn. When you come into the business saying, I need to make money, I need to make money, I need to make money, you're constantly focusing on the results. If you want to do this properly, whether you're a fundamental trader or an active trader, you must focus on flawless performance. Results come from flawless performance. You have to set results goals, but the goals are achieved from flawless performance. We will teach you in the entire section on peak performance of how to establish this mindset to make sure you're focusing on performance and the results come from flawless performance. I can't emphasize that enough. And you finally get to the point where the more you trade flawlessly, when you have an edge, you actually find out the more you trade, the more money you make, assuming the conditions match your strategy. Just trading more for the sake of trading more that's not what I'm talking about. All right, next and last but not least, access to coaches and mentors for revisions, coaching, and having a sense of community. Anybody who's in the virtual trading floor right now knows there's plenty of stuff going on there where you can ask anybody. We have the pre-market meeting with Mark. We have the afternoon recap, whether it's Scott or Mark. We have Scott do the morning call in the morning, and then you have all day in the private virtual trading floor. Okay? You must be able to have, during your trader path, the opportunity to ask somebody who's further down the line. Again, I just want to keep giving you this visual image for the next 30 days and beyond. There's a path of new trader, we'll call them newbie, and trading mastery, which let's just say Mark, Scott, Evan, somebody who's a lot further down the line than somebody who was just getting started. Okay? They went through the same thing. Everybody went through the same thing. And to speed your way through that path or to make the path smoother, to make the learning curve shorter. It's a lot easier to pull over and say, how'd you get there, than keep saying, I'm going to keep driving in circles, and then I'll finally figure it out. Ask the people that have been further down the line. That's one of the biggest things that makes the path different.